Hi everybody, it's Adam. I am back here with another video. I'm going to go over some projections based on what we've been looking at for the past few weeks. It has not been hit yet. So we were just consolidating near the high. It's also NFP week and also a holiday week. So that's why we're seeing it. Looking up here, we still have this volume imbalance and this void that's sitting up within here that we could possibly reach to, which is this white box that we have here. That's my target that I'm looking for in price action. But if we can really tell from this order flow that we are seeing, we have price working up higher here on the weekly and then coming down below the previous week to then support price to then keep moving up higher. So right now, I'm not looking for shorts. I know I sent out a tweet the other day, just looking for this higher pricing, and then we could possibly see some more consolidation. But it's not a surprise that we're seeing the daily just consolidate here up above this high after taking the buy side liquidity. So I'm going to still watch this area to see if we can support price. So if we go to the weekly time frame, I would not be opposed to seeing price trade down back into this weekly range to consolidate within here and possibly hit this weekly order block to compel price higher. But if we start getting closures down below, let's say this week, this daily fair value gap that could be used as an inversion to then send lower. I know we have bearish SMT with NASDAQ, but since it's not confirmed, it's not on the higher time frame bias, that SMT doesn't really matter. So that was always something that you can take in your notebook. If you see SMT divergence and it's opposed to your bias on the higher time frame, you can basically ignore it. Not financial advice, but you can ignore it. That's what I was taught to do, and that's how I do it. Until price tells me otherwise in the other direction. But we'll be looking lower at this levels if we can get down into here. This is a possible area, this breaker, where price can reach off of to continue up higher. But ideally, I'd wanted to see it consolidate here and give me some type of higher probability buy opportunity within this range. But it's looking like we could pull back down if we do drop a fib basically from the low to the high of this range. 50% would fall like right within here and then possibly down into this area as well. But notice that we're just consolidating around this new week opening gap because of the holiday. And this is just what we're getting as expected, honestly. But we'll see what happens here. So now we're going to go over price. It trades down here this morning. It's on Wednesday. And then we start trading back up on through. I didn't know if we were going to continue lower down in this volume imbalance here or down into this new week opening gap. As we were talking about in my group chat, we were looking for these lower levels to be met, possibly. So if we go to the regular trading hours, we have this gap here as well. So this entire range gap has not been met yet. So I'm looking at this whole gap to see if price wants to reach down there in the regular trading hours. It has not been met there yet. So now I'm watching, what are we going to get? We have this fair value gap right here, from here to here, and then we close up above it. So I'm measuring this fair value gap that's sitting right within here. I know I closed it off now for the PM session, but this fair value gap I'm measuring, and also on the 5 minute, I'm looking at this fair value gap as well. This fair value gap right here in the 5 minute. So if we measure this 5 minute fair value gap, so this is just following price. We're getting into the trades that happened this morning, in my opinion, that I was looking at and watching and monitoring and placing trades on. But this is what we saw here. We came up above it right here. Closure, okay? When we get a closure above a fair value gap, where's the buy side? Buy side here, buy side here. And then we had the London range liquidity from here to here. ICT even put a picture out. I'm not going to pull it up right now. Go look at ICT's tweet. He even had this picture, mark up your London range. So this is a part of a London range. And then also this high here was part of the London range, okay? Well, right before it. But anyways, here's the midnight level. We reached up into there and took out the London range because everybody short London has their stops there, okay? Bullish SMT at the lows with NASDAQ. So if we go over to NASDAQ, we can see that we made a higher low here, but a lower low here. So it's kind of giving indication that we could possibly go higher when we are in this higher time frame PD array. So we have liquidity taken, always rule number 1 of a trade, and then we have higher time frame PD array hit, which is rule number 2, and then rule number 3 is getting in sync with order flow, and then you look for your entry models that I talk about here all the time. So entry model, inversion, and then closures. I'm looking at this inversion here. Okay, inversion, closure above that. Okay, now what? Now we can see our drawn liquidity up above here, new week opening gap, higher new week opening gap, and then possibly even higher into the volume imbalance that's sitting up there. So 2, okay, we have our closures above inversions. Now we have our 1 minute order block. So now we have this order block right here. We trade up above. We open with a volume imbalance here in the 1 minute, comes up, trades down, get another bullish closure here. So now we can see that price really wants to start ripping and tearing up on through. We have the new week opening gap that's sitting up within there. So now if I bring over this tool so I can get a good picture without having me go away, this 2 minute bullish closure, boom, retest right here, gone. 5 minute time frame, look at the closure here, boom, retest, gone. Okay, and then we have this notice this, it's holding up above it, and then we're closing up above, even here on the 1 minute, up above this 5 minute fair value gap. That's really what we're monitoring. That's an inversion fair value gap. This is like go-to entry model for me now. Like inversion gaps, SMT divergence is just really pure for what I like to see now. So if we're measuring from here to here, that's about 4.25, and then we get 5 right there, and then we had a potential 7.5, up even higher, up in the higher part of the range later, which would be 11 to 10, somewhere around there. But that was a nice movement up and through. So you might be wondering, okay, you couldn't get that trade because it didn't fit your criteria. Okay, then what's your criteria? Look up higher. Trades up on in into the new week opening gap. Trades back down. Okay, we trade back down into the range, and then we come back up. I'm looking at this inversion level here. Trades back down, comes back up on in, trades down again. Now we traded down, took out internal liquidity, hit this bullish order block right here. So really just monitoring price. 5 minute time frame looks like garbage. Don't really like it yet. Next 5 minute time frame, we did close bullish. We do have this higher time frame fair value gap up in here to reach up into, and also this volume imbalance in the midnight open. But instead of the 5 minute time frame, let's look at the 2 minute time frame when we're still in the range. So we have this 2 minute wick that took out that internal liquidity, hit that 1 minute order block we were talking about, hit the CE of the opening range, which is this level here that we have marked up. I believe that's what it is. Yeah, because opening range, closing price there, and then opening range, opening price there. CE hit here, then we start to trade away. So what am I looking at? 2 minute closures now. We have our 5 minute rejection here. We have our 4 minute. Let's see what 4 minute rejection, 3 minute. 2 minutes, all rejecting this area. We're in the new week opening gap again. So 2 minute closure right there. And now what am I looking at? I'm looking at this level here. We get that 2 minute closure, trades back down in the low of this 15 minute fair value gap. So low of that 15 minute fair value gap with a closure up above it with a retest of continuation of price action. And we saw our internal liquidity swept, okay, before we hit this high. So boom, hits it right here, comes back down, looking at this level. So that's really what I was looking at there today, and then it came back down and in, I believe. So if we go into that, no, it didn't. Yeah, it came back down later, but it did hit the midnight open after that at some point, up into this range, and then we continued up and then consolidated through this area in lunch session. Then we traded back down and through. But this is ideally like what I like to look for is that closure up above this range, and then up into here for continuations up to and through into that range. Right. Oh, here it was. My bad. Because I was like, wait a second, that doesn't look right. That's a PM. That's where the PM session was. I was like, okay, that's a trade I did take in the PM too as well. But closing up into here, we traded down, then we came up right here, and then we traded up, and then we did come back down. That's what it was right there. It came back down, then traded up and through, and I was done for the morning. I mean, ideally, this is where I like to see up above that inversion and really starting to get lift off to the new week opening gap. And then if it wants to go higher, it can go higher. Just look for more entries if you want to. Internal liquidity swept. So instead of chasing a trade in something like this, where you're chasing it right here, you know what I mean? We end up trading back down below, and then we come up into this higher part of the range. Sorry about that. I had to pause it for a second to speak with my lady. But anyways, price traded back down on into this order block, came back up, and boom, that was it. That was it for the morning. And then we consolidated, came back down and in, created the lunch buy side here, and also this buy side up here from the morning session. I do have it labeled lunch buy side, but ideally that is the lunch. Well, that's AM session, equal highs. That's what I was looking to get tagged. It never did. Came back down. That's why I think we're going to get back up there at a later point. Anyways, it trades down below the lunch sell side. So if we're looking at the 12 o'clock to like the 1:30 time frame, this is the lunch low from right here. We trade down below the lunch low, we come back up, we shift up above this level here into these inversion levels, close up above them, reject this inversion level. We sweep on up through with bullish closures up above the new week opening gap, as you can tell right there. Go to the 5 minute time frame, you can really start to see price action with this inversion level. So this inversion level right here, I was looking at this inversion right here. This is what I was talking about. Closure up above the inversion, and then I'm looking to see if price can continue up on through. So now, after we get a closure up above that inversion, again, just like earlier, I like to see this retest and then continue up. So I'm looking anywhere within here, after we get that closure, right here, closed right on that level, and then we get this one here, We open with a volume imbalance, boom, key for trading away. Okay, so I'm looking at this level. When we open the volume imbalance and trade down in here, we're getting in. This is what I'm looking for. All right. I don't know why it's not giving me the range, but that's what I'm looking for, but it's not letting me do it for some reason. But anyways, I'm looking just at this range here, from here up to here, going up into this level, and also the midnight open again, and then higher up to that lunch buy side, which would be 5 handles. But never met it from just this one trade, but we did have a 5-minute volume imbalance. I'll go over that real quick too. So we go over the 5-minute volume imbalance. We'll see. And we really just have to be patient within this price action, okay? Really just observing price and letting it come to you instead of forcing it to happen. So we notice this volume imbalance. If it wants to come down to it, we'll see how it reacts. Comes down to it, comes back and up through. Now we have this wick right here. We got the 50% of this wick is this red line lined up with a new wick opening gap. Also not random. It's all the same thing. And then we come up into here. We trade back down into the low of it. So go down to the 1 minute time frame again. Oops. Put on the 1 minute time frame. And notice after we hit that volume imbalance right here, we trade up on through, closing up above the mean threshold of this area, and then we start to reject here, using this as a potential breaker to keep moving price up higher in the higher part of the range. So this is what I like. From right here, we close up above, and we go also back to the 2 minute time frame like we were doing earlier. This 2 minute time frame closure right within here, and then we are rejecting this high. We should not come down below the 50% of this if you want to be safe down below the volume imbalance. But ideally, we are looking right here, going to this level here, and also this level up here for that range that we have there for about almost a 2 to 1. And if it wanted to keep running higher, we could have continued back up above this level within here, up into this level here, up into that level there, going up to the 94 range or even the 92.75 for almost a 3 to 1 if price really wanted to start spooling up higher. But smart money, as you can tell, was starting to unload. If it wanted to go higher, it wouldn't have consolidated here. That's just something I've noticed with my experience, is that if it wanted to go higher, it would have. So smart money's unloading here, consolidating, unloading here, and that's where I would scale off as well as price is moving up in that direction. So ideally, this prime entry and even risk could be down below here, but to be safe, down below there. And then we got this target up within here, and we can even measure a standard deviation from this swing low here to here. For a standard deviation, we'll see how far this really shot it up to, about -0.5. So scaling off right here at the midnight open. So right there, that's not random. That is the same level, and then also the body closure is right at that level as well. So I mean, you're just seeing that stop run here into the 5 minute volume imbalance. It's all lining up, so we just have to be familiar with what we're looking for. And that gave us a run 1-to-1 risk to reward. 1% makes you 1% on a trade like this. Not financial advice, but that's just really what I'm looking for. And then consolidates, comes back down, and now we just have the rest. So that's really it, honestly. I mean, I haven't made a video in a few days. Like, why would I want to? I didn't even look at this shit during 4th of July. I have other businesses to do, like, you know. So that's like, this is like what I'm working on. Within here for today. I mean, we had some setups down within this area. I could go over those, but this is more than enough just from today. Very, very beautiful, and just got my eyes on the higher time frame PD arrays. So I'm looking at the daily time frame. Let's look at this wick. We'll measure 50% of this wick. We'll see this wick from today because the new candle already opened. 50% of today's Wednesday candle. We'll look at that wick. We'll also look at this new week opening gap, because if we can draw down to this new week opening gap, that'd be very nice as well. So I'll be looking at that here. So going forward, I'm going to wrap it up here. If you guys have any questions, let me know. I'm not a financial advisor. I'm a guy that just likes making these videos. But let me know if you need anything. All right. Take care. Love you all. Peace out.